Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. In Japan, Prime Minister Takaichi is facing a diplomatic test after angering China with her remarks about Tokyo's position on the Taiwan issue. Now, China's foreign ministry demanded that Takaichi retract her remarks. However, she's refused. And that's created a bit of a standoff between Japan and its largest trading partner. And it may weigh on the Japanese economy, particularly if China were to impose sanctions or even cut supplies of critical minerals. Earlier today in New York trading, the yen broke to the weak side of 155 against the dollar. And in a moment, we'll take a closer look at the macro across the APAC. But we begin here in the States, where the equity market retreated ahead of the earnings from Nvidia due after the bell on Wednesday. There was also some anxiety tied to the release of two readings on the U.S. labor market due Thursday. Joining me now is Matt Sallee. He is Executive VP, also Head of Investments at Tortoise Capital, joining from Kansas City. Matt, thank you. We've got these earnings that will drop Wednesday after the bell from Nvidia. As you know, we've seen a bit of doubt here as to the sustainability of this AI CapEx spend. And I think we can agree that good numbers from Nvidia would go a long way to quell that uncertainty. Are the Nvidia earnings a big question mark for you, or do you feel a level of confidence that the company will deliver as it has in the past?
We think demand continues to be very strong for their chips. So not a concern for us. I think the market's been a little skittish recently, obviously, around AI. I'll tell you, we do not think this is a bubble by any stretch. We've been real focused on how much the hyperscalers are spending. They're going to spend, Big Four, $350 billion this year. Up big year over year, up big quarter over quarter, and it's only going to continue to grow in our view. And we think there's, we are at the very early stages of AI adoption in our country. It's a very small percentage are actually using AI effectively.
So we got news today about Amazon coming to market with about $15 billion in debt. We know that the hyperscalers more recently have been financing a lot of this build out, not with the cash funded model predominantly, but they're making greater use of debt vehicles. Is that a concern to you at all?
I mean, these companies have a higher credit rating than the U.S. government. So the short answer is absolutely not. If you look at the free cash flow generation, again, of the Big Four, the numbers are literally massive. So, I think it makes sense to issue some debt. It's cheap debt. But I think they don't necessarily need to by any stretch unless spending really ramps up. But we're talking hundreds of billions of dollars of free cash flow projected next year across the Big Four. So not a concern for us. Financing is not a concern for us at all.
We know the earnings story as it relates to some of these AI behemoths has been a driving factor in pushing equity prices higher. I think it's fair to say another part of the story is expectations that we're going to get a lot more in the way of Fed easing. We heard today from Fed Governor Chris Waller, who repeated his view that the Fed should cut the policy rate by 25 basis points in December. He's squarely focused on the weakness in the labor market. Would you agree with that approach to monetary policy right now?
I think we'll see a cut either in December or in the next two meetings. We're very likely to see a cut in our view. Frankly, I know the job market has shown some signs of weakness, but with all the AI spending, it's very hard for us to foresee a recession, just given the amount of economic activity tied to the capital spending side. So there will be some, I know for, recent college grads, it's a little harder to get those entry level jobs, I think partially because of AI. So something we're watching, but frankly, we don't see the economy cooling anytime soon.
There's been a lot of change in the labor market, as you well know. Much of it is structural with immigration policy changing. And I was struck by some data coming out of the Cleveland Fed. Notices of impending mass layoffs by U.S. companies surging in the month of October to among the highest level on record. So the Cleveland Fed found that some 39,000 Americans were given advance notice last month as required under the WARN Act. So there's something going on in the labor market, how it's deteriorating. Do you think that we don't have complete visibility into the structural shift or the structural changes that are producing these mounting job losses?
It's hard to see who's not, what industry is not going to be disrupted by AI. But clearly, the early signs were the Challenger layoffs, factory workers. There was a huge number increase in layoffs. So I think, there's some very obvious industries that will be impacted or job types that will be impacted. But I think we're just at the very early stages of understanding what this all looks like. I mean, at Tortoise, we have not had to hire as many analysts as historically we would. So that's just one kind of real life anecdote. We've been able to be more efficient. So again, I think every industry is going to be disrupted to some degree.
How are you approaching an investment strategy these days? Are you a little conservative now, given some of the lofty valuations that are attached to the AI trade? Are you being a little defensive? Are you participating in some of the rotation that we have seen lately, away from, let's say, big cap tech and into things like healthcare or even the financials?
Basically all we do is energy and infrastructure. So what we have done is the energy sector has not had a huge year, but it is a big beneficiary from surging demand, whether electricity or the natural gas to produce the electricity. Those names are, barely up this year. If you look at the energy infrastructure companies, utilities have done a little better. So we see good value there, especially relative to the growth. And then on the, kind of picks and shovels of AI, so think cooling infrastructure, the data centers themselves, any number of the digital infrastructure, those names do have relatively high price to earnings ratios, but the growth is massive. So their PEG ratio is actually pretty attractive. You mentioned Nvidia earlier, and I think there's a consensus view that it's overvalued. If you look at the growth, I mean, it's not expensive relative to the growth, assuming that growth continues, which we believe it will.
I'm trying to understand investor sentiment vis-a-vis Bitcoin. I know we're down sharply from that October high of around 126,000, right around 92 grand at the moment. Do you see Bitcoin and the volatility in that trade as impacting broader risk asset psychology?
I think it's absolutely, whether it's causing it or a symptom, probably more so the latter. We like the Bitcoin miners. We don't invest in Bitcoin directly, but we like the miners because they have access to electricity. They've, built out their quote unquote data centers, 5 years ago and already have access to electricity. They're repurposing those now to provide high performance compute and speed to market with electricity. That's the gating factor. And we see a tremendous value proposition here. We think these companies are totally going to re-rate from trading at very low multiples to trading at, if they trade like the traditional data centers, these are massive returns that we can see. So again, we don't directly invest in Bitcoin, but we do like the miners. And I think it's just a function of kind of, recent risk off trade in terms of Bitcoin being off.
Okay, we'll see where we go from here. Matt, always a pleasure. Thank you so very much. Matt Sallee from Tortoise Capital. Matt is Executive VP, also Head of Investments, joining from Kansas City here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. Stocks across the Asia Pacifc are feeling a bit of pressure after a decline in U.S. equities. We had the S&P 500 down about 0.9%, closing below its 50-day moving average for the first time in 139 sessions. Clearly, risk assets are out of favor. That would very much include Bitcoin. It was down sharply today from its October high of 126,000, currently around 91,000. And in that decline, Bitcoin has lost about $600 billion in total market value, according to data compiled by Bloomberg. We got some macro analysis earlier from Kelvin Tay. He is the regional CIO for UBS Global Wealth Management. Kelvin spoke with Bloomberg TV host Sherry An and Avril Hong. And the conversation began with a question on what's driving the price action of markets in the APAC.
I think in Asia, the dominating news right now is basically the tensions between China and Japan and how that is actually playing out. But as you know, geopolitics have never had an overriding shadow on the equity markets itself, and it tends to actually fade off after a couple of weeks. So we don't think this is anything different. I think what's more interesting in Asia is roughly with regards to the movement where the dollar is concerned. I mean, the dollar has actually been very strong against across the board all Asian currencies, with perhaps the exception of the Taiwanese dollar last week. But, a strengthening of the dollar is usually quite negative for Asian equities because of the very strong inverse correlation between equities in Asia and the US dollar. So we do need the dollar to actually have a breather before we can actually expect the Asian equities to continue to outperform this year.
Kelvin, you were talking earlier about dollar and the rebound's impact on Asia stocks. Is it time to perhaps relook what we're seeing in not just Taiwan dollar, perhaps Korean won, given the possibility of intervention? Absolutely.
I've always thought that, the Asian currencies cannot weaken too much against the dollar, not in this kind of geopolitical landscape. Because if the US government imposes 15% tariffs on you and you depreciate your currency by about 10%, that in some ways actually neutralizes the impact of the tariffs. So I think there is, to some extent, some caution about how much the dollar can actually strengthen, or rather how much the Asian currencies can actually weaken against the US dollar. And I think in the crosshairs of the US Treasury is basically the Japanese yen right now. And I think the Treasury Secretary has on quite a few occasions pointed out that the BOJ is actually behind the curve where inflation targeting in Japan is concerned. So I don't think the Japanese government, where the Ministry of Finance is concerned, will allow the yen to weaken dramatically without intervening in the market. And of course, intervention could perhaps actually help on a 1 week basis, but after that is basically what the BOJ is going to do where the Japanese yen is concerned. The market believes that the BOJ will likely hike in December, and so do we. But post that hike itself, what is the trajectory for the next 6 months with regards to the Japanese yen? As you can see, the Japanese yen has actually weakened quite sharply in the last 2 months to about 155 right now. And the previous low was basically about 160, 161. So we're not that far away from that kind of levels. But I do think that you will likely see BOJ intervention as we move closer to those levels.
What can the BOJ do at this point when you have the new pro-easing Prime Minister Takaichi, and also at the same time you had the last quarter GDP numbers actually contracting and giving her ammunition for the fact that the economy does need support? And let me add to that the layer of geopolitical tensions. When you have China, Japan going at it, what does that mean for the currency as well?
Well, you do need to basically balance your fiscal policy expansion and your monetary stimulus as well. The BOJ needs to exhibit independence and not be swayed by what the Prime Minister or the government wants them to do. That will actually bring credibility into the Japanese yen, into the BOJ's monetary policy stimulus, right? So you don't want the BOJ to be in lock, stock and barrel with the government itself. You need to actually be careful and mindful of the fact that, a very weak yen will basically result in higher inflation further down the road. And you certainly don't want that coming in when the economy is actually slowing down. Then you have a very, very tricky situation to actually try to get out from. So yes, on the fiscal stimulus side, that's positive. That's pro-growth. But on the Japanese yen side, you really have to watch and make sure that the yen does not weaken dramatically further from here, because moving from 146 to 155 right now was quite a sizable move with regards to the Japanese yen and the dollar, right? So you don't want that momentum to actually be built into expectations. And if the BOJ loses credibility, then whatever they try to say to try to manage the movement of the Japanese yen is actually going to fall on deaf ears, and the industry is just basically going to disregard whatever the BOJ has to say and short the yen dramatically. Then we're going to be in a lot of trouble there.
That is Kelvin Tay, the regional CIO for UBS Global Wealth Management, speaking earlier with Bloomberg TV host Sherry An and Avril Hong. And before we go, let's take a look today at the maker of the children's song Baby Shark. This company is Pinkfong. Its shares are soaring as they debut in a South Korean IPO. But the question is whether all of this is sustainable. Here is Bloomberg Asia stocks reporter Yokyung Lee.
Yeah, so it's not just the Kospi or Costa, but overall Asian markets are down today. But the pockets of excitement coming from the small cap Kosdaq market from the Pinkfong's trading debut today, it's up more than, it was actually up about 60% at the open. So after the IPO was at the top, price at the top of the marketed range, and that probably values the company at more than 500 billion won. That was at the top of this marketed IPO price range. So, but whether this first day pop is sustainable, that probably depends on how the company goes ahead with the intellectual properties and character development that are in the pipeline. So there are some source of optimism because the company's Baby Shark has been it's been a blockbuster hit with this YouTube sensation. But the company was also able to develop the characters such as Bebe Fin that's still popular, and the company has been highlighting during the roadshow that its reliance on the Baby Shark has been going down. So there's some pockets of optimism.
That is Bloomberg's Yuk-Young Lee. Shares in Pinkfong had been up by more than 60%. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.